That is the rate of the 5-minute external high. We do have to wait for one more candle. There you go. And now we have a fair value gap formed. The fair value gap forms there. Once again, doesn't matter how tiny or small it is, but it is important that the fair value gap is there. That's 8.3, so you would do 9.3. You would target a fixed 1 to 1.5 bar. So if I can do that properly, let's do this over here. Okay, so this is close enough. Let's place the limit order, and now you're just simply waiting for the fill. You've not got filled. This is the strategy that we're going to be going over today. I'm recording this technically at the end of the video because I want to have the stats to show you, but we executed on a random month using the strategy that I'm going to show you today. It is a mechanical strategy. There's not a lot of thinking you need to do. You just need to be here at the right time for the strategy to be profitable. I'm not here to lie. You will have losing trades and winning trades. We took roughly 14 trades in a month. So you're probably getting a little bit over one trade per 2 days, which is acceptable. The average duration of the trade is 46 minutes. The best winner was 3%. The average win was 2.5%. Total winners 9. Total losers 5. Average risk to reward 1.35. And you have all the stats for the strategy over here. We executed once again on March. And this is the strategy that you're going to learn today. Everything regarding it, you are going to learn in this video. How to execute it, what does it imply, the hours to trade it, the pairs that you need to follow in order to trade it, and everything else is going to be included in this video. So make sure you stick to the entire video, guys, because the little contingencies that go into any strategy are going to be covered within the video. So you need to make sure that you watch till the very end so you learn everything that you need to learn. We started on a $100,000 account because that's what I thought most traders would want to see, considering everyone is looking to get funded. We had about a 65% strike rate, which is not massive. It is not bad either. And we did about 14.3% profit in a single month. So with that said, guys, I leave you with the video. Follow my Twitter, and I hope you enjoy the actual strategy and you can implement it and make money. All right, traders. So what you see over here is a backtesting software. We're going to be going over a full month of data. This software that I'm using here, I am not affiliated with them whatsoever. I just use them because I think it is quite helpful, at least for this particular video. Now, what you see on the right of the screen are the rules that you're going to follow. As you can see, there's 4 rules to follow, which are quite simple, and anyone can really follow this strategy and become a profitable trader just by following the simple mechanical strategy. Now, there are some contingencies that I will be going over throughout the trades. So as the different trades do set up, there are different minor adjustments that you might need to do, but overall, this is the strategy, okay? And if you want to find out about all of them, you need to make sure that you stick till the very end of the video. Now, let's go through the rules rather quickly. So this is a strategy that you're going to be executing in gold, using the 5-minute and 1-minute time frame only. You're going to execute this strategy between 7 a.m. and 10:30. So that is your window to execute. And this is all based on UTC +1, which is London time zone. You will have to adjust and basically adapt that to your own time zone, depending on where you live. Rule number 2, you're going to be denoting the 5-minute external highs and lows of the structure, which once again I have multiple videos on structure, especially the mentorship series covers it very in depth. So if you have questions with that, although it will be very clear with the actual trade presentations, you should go and watch the mentorship series about structure. You're going to enter on the 1 minute using a fair value gap. You're going to place your stop loss as rule number 4 below or above the swings, and you're going to target a fixed 1 to 1.5 R. You're not going to look for liquidity. You're not going to look for structure. You're not going to look for naked levels. You're just simply going to target a fixed 1 to 1.5 R. I've tested the strategy extensively, and that works good enough. Now, let's see what sort of results do we get, because we're going to be executing trades. The P&L is going to swing. We have a hypothetical $100,000 account, which is what many traders do look for when it comes to funding. So that's why I thought this was appropriate. And let's get started over here. So first of all, once again, we're at the 7 a.m. window. We're looking at external highs and we're looking for external lows. Let's see over here. So the external low is here. External high we have in here. Now, all we're doing is we're waiting for a raid of these, either the high or the low, to then look for a fair value gap entry in the 1 minute. So let's get started over here. Let's speed this up a little. Let's jump into the 1 minute. Now that you've determined the external highs and lows, you do no longer need to look at the 5 minute. You can now jump into the 1 minute and you're going to see price action play. And once again, we're within our window. We've now broken below the swing. Now you're looking for a fair value gap above the external low in this case to execute a trade. So let's see. Okay. If we get one more candle without filling this area, that would be a fair value gap. There you go. So now you have a valid fair value gap that you can execute on. So we're going to denote this as such. And now, once again, following the simple methodology, you place your entry at the fair value gap open. You put your stop below the swing plus 1 pip, so because we're accounting for spread. So that's 117. So we do 127. And you will target a fixed 1 to 1.5 R. So we're going to place the order as such. And now we're going to let the trade play out. So we're now filled. Once again, this is not a strategy that has a 100% win rate. I do not think there is something like that. But it has a positive and very positive expectancy. So you're not doing any risk management. You're allowing for, okay, so we got stopped out on this trade, right? We went rather close to target, but once again, you're not doing any risk management. The only risk management you're doing is closing the trade at 10:30 if the market has not gone to your stop loss or take profit. So what do? We go to the next session. Now, we can clearly see that the 5 minute external low is here. And on in terms of external high, we don't have that information. So what do? We need to zoom out. Now we see it. It is over here. We draw it across in time. And these are the only levels that we need to pay close attention to. Now, I presume you've understood the rules, so I'm going to get rid of that. And we're going to get started over here. So we jump into the 1 minute and we let it play out. Okay. That is the rate of the 5 minute external high. We do have to wait for one more candle. There you go. And now we have a fair value gap formed. The fair value gap forms there. Once again, doesn't matter how tiny or small it is, but it is important that the fair value gap is there. That's 8.3, so you would do 9.3. You would target a fixed 1 to 1.5 R. So if I can do that properly, let's do this over here. Okay, so this is close enough. Let's place the limit order, and now you're just simply waiting for the fill. You've not gotten filled, and let's see what happens with this trade. And there you go. You get your profit target met. Mind you, I'm risking 2% per trade on this particular strategy, usually, just because I get one trade a day. Let's go to the next London session. Zoom out, 5 minute time frame. Looking for external structure. We have the external high here, very easy to see. We are looking now for the external low. The external low is right over here. Let's see over here, and now we're waiting for one of the two. Okay, so we're getting closer. There we go. Now, this is important. We've broken above. You're not considering any fair value gap that's above the external high for shorts, and the opposite would be for longs here below this low. So you need to wait. If we do break below, there we go, right? We now break below, but we don't have a fair value gap, so we keep waiting. We move higher. We're now above, so there's nothing to do. We're now below, but there's no fair value gap. We keep waiting. We keep waiting. Now we have a fair value gap. We have a fair value gap here to here. And now we can go ahead and place a limit order there to sell. You would place your stop above the high plus 1 pip. So that's 20. We do 29, 21. We target a fixed 1 to 1.15 R. There you go. We place the order. And we allow the trade to play out and see whether the strategy is really something that you want to implement, or maybe it's just for learning purposes and getting some information. Once again, we're not doing any trade management. There you go. So your target is met before 10:30. So you move on to the next trade. London session, 5-minute structure. You're looking for this external low. Sometimes it's easy, other times it will be harder to determine it, but that's the thing about this strategy, okay? Most of the days, though, it will be rather straightforward. So now we're waiting to see. Okay, now we've broken above the 5-minute external high, but no fair value gap below the external high has formed, so you keep waiting. We didn't close below, so nothing there to do. Now we did, and we have a fair value gap here. Right? You have a fair value gap there that you can use for an entry. So you would place your short position there. Once again, the high is 8.9, so your stop is 9.9. We can do 10. It's not really going to change anything. Entry there. Place the order. Save. Execute the trade. Now you wait. You don't care if it actually goes to target before filling, okay? As long as it's within 10:30, which is the most important aspect of this strategy, you're following it. So there you go. You have another winner. Now, it's not to say that you're always gonna win, which you're definitely not gonna, but it does work very well. It has a positive expectancy, which is all that matters. All that means is that as long as you execute long enough, this strategy will make money. So we do the very exact same thing. We look for the fair value gap that forms. Now we broke below. We don't have a fair value gap yet. We need to wait for one more candle. No, we don't have one because this wick actually filled the fair value gap, and therefore there's no trade. We're still waiting. No fair value gap to be short. There could be one forming now. There you go. Now you have a fair value gap that has formed here. So what do? Once again, you place your short 1 pip beyond the high, so that's 15.4, and you look to target a 1.2, 1.15. You place your stop. Once again, no emotions. You're executing this relentlessly, like a robot. You're just simply seeing whether this strategy is something that's going to work. And there you go, you get stopped out. Nonetheless, we can see that we're a little bit over 2% up so far on the month. Let's go to the next London session. The next London session arrives, 5-minute, and you're looking for the external highs and external lows. You have one here, the external low is there, and you have your external high here. You're always keeping price within a range, and you're not interacting in any shape or form within this range, and you're just simply patiently waiting for the external areas to be tapped. So we wait and see what happens. There's no trade now. We're still within the range. Okay, now we break above. When you look at this price action, you might say to yourself, hey, is there even going to be a trade? The answer is yes. This is still 8:45. You still have about 2 hours to go. You need to wait for a fair value gap that closes below the external point. So there's no trade now. There's no trade, no business. No business still. Now we've broken below. Now we've closed below. Now we're looking for the fair value gaps. Do we even have any? Yes, we do. We have one here. From this point to this point. So what do? You place your short limit here. You put your stop beyond the high, 12.9. So you do 13.9. You go ahead and denote this as 1.2, 1.5 R. You place your order, and you carry on with the trade. You have no emotions, and you keep this order in until 10:30, or stop loss or take profit has been tapped. Once again, you might get a little bit agitated seeing this movement, but now you get filled. You're still in the trade. The market is now pushing in your favor. Once again, you're not doing any management. It's 10 now, so you have 20 minutes more to go. And wherever the market is at 10:30, that is where you close the trade. So that's 10:25, 28, so 2 more candles. That's 29 and 30. So you close the trade out right here. Small profit, although not what you were expecting for. So we close this trade out and we move on to the next London session. We go to the 5-minute chart. We go over here. We look for the external structures. We have this one here. And we obviously have this one there. We're now moving into the 10th. So yeah, so far in the month, you are doing just fine. In profits, just following your system, right? We will have better months, you will have worse months. As long as you're following the process, you will be a winner. That's guaranteed with this strategy. So we wait. Now we break above, we close below. We have a fair value gap. Once again, the fair value gap has happened, and we have confirmed it with the closure back below the external point. So you have your entry there. You will place your stop loss, your entry there, 24.1. So you do 25.1. You go ahead and target a 1-to-5 risk to reward ratio. We place the order, and we allow the market to do what it needs to do. So now we're filled, we take a little bit of heat, but we're now moving into profit. Once again, you're not happy because you're in profit, you're not mad because you're in drawdown, you're just simply following the strategy to the best of your abilities. You will take losers, you will take wins, but you need to follow the strategy. We're now moving into 9, so you're not doing anything with this strategy, with the trade whatsoever. You're just simply waiting to see if you're gonna get stopped out on the trade or if you're gonna see a winner. It's still 9:45. You're still allowed to hold this trade. We're now moving closer to target, and there you get your target met at 10. So within the rules. Now we are $8,000 up on the strategy. Let's go to the next London session. Go to the 5-minute, and we see the very exact same thing. We have the external low here. We have the external high over here. And we're now waiting to see which one is going to get tagged first to execute a trade. Okay, we're now below it. Once again, we zoom into the 1-minute because we always execute on the 1-minute. There's no fair value gap to go long, so you keep waiting. This could form one. There you go. You have one fair value gap here. So you denote that as such. You place your position here. What else do we have? You place your stop below this, so that would be 18.4. And you target a fixed 1 to 1.5 bar. You place your order, you take the trade, and you follow the rules. So now you're filled. Now you're waiting for an outcome. That's all you're expecting, an outcome. You're not expecting anything else. And you get another winner. Right? Simple price action reading, simple strategy, simple rules. I couldn't make this any easier for you guys. So we go ahead and do the exact same thing. Now, this is where it gets tricky because the external low hasn't really swung away that much for it to be considered external, although technically speaking, it is an external low. So we need to follow the rules. And this would be your external low, external high, and you're waiting now to see. Okay, so we broke above very aggressively. Now we need to see a fair value gap and a break below again to execute a trade. If that doesn't happen, okay, now we broke below, right? Now we have an entry. And now you have to decide because you have a fair value gap here and you have one there. So you need to decide, and one there, obviously, on top. You need to decide where you want to execute, and there is no right or wrong rule. The only thing that I would say, when you have these aggressive pushes through the external points and then it comes back down, what I tend to do is take a fib and sell just above the 50, so the fair value gap that's discounted. In this case, to me, that would be over here. I would go ahead and place my limit order there. I would go ahead and put my stop above the swing and 1 pip, so that's 36.1. You would go 37.1, 37.2, 37.1. You would go 1 to 1.5 R winner if it works, and you would go ahead and place your order once again. So you do not get a fill, and you keep waiting, right? We're still within the 10:30 constraint hours, so this is perfectly valid. We've now tapped the trade, and that's perfectly okay. And now we're just waiting to see if we're gonna get a fill. Sorry, if we're gonna get a stop loss hit or take profit hit or turn 30 benchmark to stop the trade. We're still valid for the trade. The trade hasn't hit your stop loss yet. Your stop loss is there for a reason. We're now moving into profit. This is 8 a.m. We're still within our time constraints. And we're moving lower. There you go. You get your target met. Once again, although it takes quite a bit of time, you do get your winner. So we move on to the next London session. Go to the 5-minute external low right here. External high right there. And now you're waiting to see what's going to happen with this here. There may be days where you don't get a trade, and that's perfectly fine. Okay, we've broken below, but we have never closed above. So there's no trade there. You're still waiting for 10:30 to determine if there's a trade or not. As of now, you're just simply observing gold drop lower. It's 8:45 now, nothing to do, nothing to execute on. And this is the beauty of the strategy. Sometimes you can just sit back and relax because you know exactly what you're looking for. 9:30, still nothing. You still have an hour. Okay, now we've broken and closed above, and we have the same situation where we've extended a little bit too much for me to want to buy or sell any fair value gap. So I go with the fib, I look at the 50, I look at this fair value gap that's within the 50. I place my buy limit right there. I put my stop below the swing here. And I target a 1.15R winner if it works, right? So we do that. We place our order in, and we see if we even get a fail or if we have to cancel. So we're moving into 10:05. Okay, so it looks like we might have missed this trade. It's 10:15, 25, nothing. No trade this particular trading session because we never got a fill. We came close to it, but it never fell. So we move on to the next London session. We go over here. We clearly see the external low is here. External high is right there, and you let the market do its thing. And once again, I am showing you this backtest because it's as realistic as it can probably get. I don't want to make this video too long. I'm not sure if I'm gonna go through the entire trading month just because I don't want to have a 40-minute video on the strategy. I think it's rather not ideal. So now we break above, but it's already 11, so no trade. Nonetheless, the strategy should now make sense. I mean, what we can do here is probably skip a few sessions so we can trade till the end of the month. But I don't necessarily want to go through the entire trading month because we're still in the 17th and it's going to take a while before we reach the end. But nonetheless, hey, let's do this one here. External low there, external high there. We now wait for price action. Nothing yet. There we go. We break above, close below. Do we have a fair value gap? Yes, we have one here. Once again, doesn't matter how big or small it is. As long as there's a fair value gap, there is a trade to be taken here. So 17.2, because we do always 1 pip above the actual swing high or swing low. We place the order, you're tagged there, you take out a bit of heat, and let's see if it works out, and you get yourself another winner. Once again, very, very simple execution and very simple trade. You had the external high there, we broke the above, close below, formed the fair value gap as an entry. Let's skip forward a few sessions just because I don't want this video to be too long. Let's do Tuesday here. Once again, I don't know what the results of this month are going to be. So it's not like I'm skipping sessions where I think it's going to lose. You can go ahead and test it out for yourself. 5-minute external low, 5-minute external high. I'm just simply following the rules. Let's now see what happens. So we're now moving into 8. Oh, so this was too fast. Nonetheless, looking at this, we broke below, closed above. The fair value gap formed here. So you would have probably gotten filled with this candle there, right there. But I missed the trade because I skipped through it too fast. So yeah, this might be a miss, although it should have been a winner technically. But once again, that doesn't mean that you're not going to take losers. It's just that I happen to miss this one. So let's go to the next session. Let's move into the 5-minute. We're now moving into the 23rd of March. So let's go and denote the structure points. We have this external high here, but that has already been taken. And the only thing that I do see as an external low is this. And external high, I would consider it to be over here. Definitely. Like, there's no questions about it. It's absolutely there. And now we're doing the exact same thing. We're waiting for the market to get there, if it's going to get there within our time constraint. Once again, the most important aspect of this strategy is the time. So we'll see what happens here. No executions before 7 a.m. and no executions past 10:30. And you close every single trade at 10:30 if your stop loss or take profit has not been hit. Once again, it is past 10:30, no trade. You move on to the next day. Next day arises, Friday. What are you looking for? You're looking for this external low there. What are you looking for? You're looking for this external high there. And you're waiting now. Okay, so now we've broken below. And you're waiting for a closure above, which we do not get as of now. No closure above. There we close above. You place your entry here. You put your stop below the swing there, so 17.2, and you target a cool 1 to 1.5 R. Once you do that, you simply go ahead and place your order, save, and we'll see if we even get a fill and if it works out. So we got a fill, and we'll see if this trade actually ends up going to profit target. As of now, we are in profit, but once again, nothing to get excited about. You're not managing the trade yet, so you don't have anything to do here. And there you get your target hit. Let's move on to the next session here. Go towards the 5-minute. This external low has already been swept, so we have to zoom out, and we do see that we have this one here. And in terms of the external high, once again, the most recent one is there. And now you're simply waiting. Okay, so this creates rather equal lows, so there's nothing there still. We are now waiting. We're still within our time constraint, so, whoa. Okay, so once again, I might have missed the move here. Well, it doesn't really matter. I would have been offered here to go long. Once again, you place your stop there, entry there, stop there, 1 to 1.5 R, and you place your order. And as long as it's not 10:30, you can keep this in, and we'll wait and see if this is eventually going to fail or if we have to remove the order. As of now, it is still 9, so we don't know what's going to happen here. All we know is that we want to be long there at that point. 9:30, 9:35, 36, 37, getting closer to the potential fill, but still not quite filling just yet. Now we filled. It is 10. We have to wait for 10:30 before making any decisions, unless we get stopped out earlier. Okay, so we get stopped out on this trade. We take a loser. We move on to the next trade. There we go. We'll have to denote the external landmarks. We have the external high there, no questions about it. External low there, and we're waiting for the exact same thing. We've broken below the external low. We're now waiting for a fair value gap close above. We now closed above and have a fair value gap, so our order goes into the market with no emotions, no hesitation. We place our stop loss below this structure. 1 pip below, we target a 1 to 5 winner. Okay, I guess this is good enough. We place our order in. And you don't need to worry about news because you're trading it during the London session. So there's not going to be USD news. You get stopped out right there and then. Remember, we started this account at 100,000. We're over 16 grand in profit, so the strategy is doing quite well. Remember, your winners are larger than your losers. We do not have an external low close enough there, so we zoom out and we see it over here. Once again, all you're doing is looking for a relevant liquidity pool that traders could get trapped so that you can take advantage of in the external high there. You're now waiting to see if the market is going to run any of these landmarks. Now it does. We closed above here, no fair value gap, no fair value gap. This could be forming one. We need to wait one more candle. There you go. We have a tiny fair value gap, although a valid one. So you go ahead and do the exact same thing. You go long there. You place your stop 1 pip here, so 16. And you target a 1215 winner. You place your order and you see if you get a fill. Okay, so the market runs instantly to take profit without filling you. Nonetheless, you keep your order in, as we said, no trade management besides the fact that you're waiting for 10:30. So this is 8:55. Nothing there. 9:20. Let's go to the 5 minutes so we can go through this rather quickly. 9:40. Still valid for a trade. But once again, it's running away from you. At that point, you'll probably miss the trade. It's now 11. You remove your order. You go to the next day. This is the 29th. So we still have 2 more sessions to go. Let's go to the 5 minute. We have external structure there. We have external structure there that has been swept. So you look at the next one there. And you're waiting for price action. Okay, now we break above, close below. No fair value gap just yet. No fair value gap. Now we have a fair value gap, although once again, not the best of the best. It is a fair value gap, so you have to respect the rules. You go and look for a short there. You run a stop 1 pip above the side, which would be 8.8, so you would be looking 9.8. 9.8, and you would look to target a 121.5R. Place the order. This strategy is going to help with passing funding challenges, and we'll see whether this strategy, this trade works. Okay, so you get stopped out again. So what do? Nothing. You move on to the next day. You're done trading the strategy for the rest of the day, which doesn't necessarily mean that you cannot trade other strategies, right? This is just a one bullet strategy per day, so to speak. We have the external high there, and 7 a.m. we're waiting. We are waiting. Now we broke above, close below. We are waiting for a fair value gap. We need to wait one more candle. There you go. That's a fair value gap formed right there. You then go ahead and add your tool. 14.2, so 15.2. Take profit 1.15R. Place order, no emotions, just mechanically executing the strategy. You do not get a fill. The market comes close enough though, but you do not get a fill and the market runs away from you as far as I can see. I mean, it still has time to technically go ahead and tuck you in, but at that point, you've probably missed the trade. There is no trade. So let's go to the 5 minute and let's try and see if it does fill before 10:30. Otherwise, you have to delete the order. Once again, I've shown you everything in this video. I've shown you winning trades, losing trades, 10:45, so that's done. And everything else in between. So hopefully you guys enjoy the strategy. We did go through a lot of data. We can be, hopefully you guys enjoyed it. We did gain over 10%, so just shy of 15% profit in a month with losing trades, missing trades, and winning trades. So you can imagine how this strategy performs. It is mechanical. There is not a lot of thinking you need to do besides knowing the rules. You can leave me your results in the comment section. I will be taking a look at them. You can follow me on Twitter, and hopefully you enjoyed the strategy.